What's going on, everybody? This is the blockchain backer, bringing you the latest cryptocurrency news and analysis. Today, we'll be taking a peek over here at the Bitcoin price chart as we get ready to wrap up the week. As we conclude this week, it looks like the Russell 2000 is having a pretty decent day, up almost 2% compared to the rest of the indexes, which are up about 0.5% to 0.25%. I made it through a 27-minute video yesterday without talking about the Russell, so of course we have to talk about it today. This, of course, is a required element to happen for any type of expansion in the cryptocurrency market. So, of course, we've been keeping a close eye on it. Decent pop today as the market prepares for next week's big event where we're going to have the Fed rate cut. And the market is super indecisive on which way that is going to go, whether that is going to be a 50 basis point rate cut or a 25 basis point rate cut or 0.25%. Odds right now are at 53% that it's 25 basis points, 47% that it's 50 basis points. There's not many trading days left until we get to that moment. And if you recall, for the last dozens of them, by the time we've gotten to the meeting, the market has been pretty decisive on which way this is going to go without there really being any room for surprises. So this is pretty unique and unusual to see the market so divided as we get ready to head into that. Meaning, if it remains like that, when we get there in 5 days, it seems like the market's going to have some surprise to it, no matter which one happens, if the market doesn't find a way to become unanimous in what they do believe will happen. We've, of course, waited for these moments to get here. We are within the window of expansion from past cycles for Bitcoin. This is the longest non-expansion that we've seen so far. Merely by 5 days, Bitcoin's entire price behavior has acted in line to the day of all of these moves that have happened in the market. The last breakout was delayed by 6 days, so we still are within that window. But of course, we sit on top of the 50-week moving average. I'm not going to go into all of that in this video. I covered that in depth in yesterday's video. Gold is absolutely ripping to the upside, which is actually consistent with Fed rate cuts coming. The big question is, will the stock market act like it has for the last 3 cutting cycles, where we actually see equities roll over when we enter into cutting cycles, like in 2001, 2008, and here in 2020. What is consistent, though, is gold ripping. And we are all on edge to see whether or not crypto is going to act differently than it's ever acted before when it comes to the 50-week moving average, and that equities will behave differently than what we've seen in past cutting cycles as well. One of the things we theorized when it came to equities over the last year and a half is what it would look like during a cut and a pause and a hiking cycle, like when it comes to the Dow Jones. We studied this range a whole lot on how it escaped from the range during the pause and then peaked over there, and once the cut started, then equities rolled over. So we've looked at that range to say, are we going to act similarly to that here in 2023 and in 2024? Adjusting for size and time, seeing that we had the hike, we have the pause, and then here we go into the pause, just as we did back here right before the great financial crisis hit. Now we're getting ready for the decision to come and the rate cuts to begin, and to see if we are going to do what we did in the great financial crisis, or if this is going to print a massive bubble. So in the case of a bubble, I'm sure that's the thing that people will want to say, is that even possible? I'm really not sure, but it is unequivocal to me that equity market expansion is absolutely necessary for us to see expansion in the cryptocurrency market. So when I go through this stuff, I have to find a way to say, is there any way this bubble could keep going? Is there any way you could print a bubble significantly higher than what we've already seen? And just like we were talking about with Bitcoin and the 50-week moving average and expansions, that no matter what happens for Bitcoin from here, it will be different than anything we've ever seen. If the 50-week moving average becomes a springboard, that will be the first time in history that the 50-week moving average does not have its 100% hit rate of forecasting bear markets. But also, if the 50-week moving average is correct in its forecasting a bear market for Bitcoin, it will be the first time in history that Bitcoin does not go into an expansion. So no matter what, this time will be different. Either the 50-week will be wrong for the first time ever, or expansions will be wrong for the first time ever. They both have these 100% hit rates, and by default, one of them is going to be wrong. So something different is going to happen. Now, for the last 3 cutting cycles, they also have 100% hit rates for the last 3. We do a cutting cycle, within a couple of months, we're in a recession. But if the bet is on expansion to happen and that the 50-week is going to be proven wrong, then it seems unequivocal to me that has to occur. And of course, that means the Russell has to go too, the true measure of expansion and breadth in the market. So the question is, how can that happen? And what we're going to do in this video is talk about bubbles and anatomy of bubbles. Now, there is no doubt if you've watched this channel, you have seen me point to what the Roaring '20s looked like, followed by the Great Depression. If you haven't watched this channel, you've probably seen this chart before. But we can get an idea of how high the Dow Jones is right now in relation to how big the Roaring '20s was that ultimately led to the Great Depression. It starts with a broadening wedge, eventually breaks out, starts with a broadening wedge, eventually breaks out, and that's your Roaring '20s that ultimately leads to the Great Depression. You can see that the bubble that we have printed since the Great Financial Crisis is bigger than the bubble that we printed during the Roaring '20s. Amazingly as well, it has even exceeded what a 4.236 extension would be, which happened to be what we were here for the Roaring '20s, but we are even higher right now for the Dow. Again, for long-term viewers of the channel, you have undoubtedly heard of the double tap, back test, bull flag, breakout, short squeeze, violent V-bottom, and pull out of there, all occurring back at the previous all-time high. This is very normal to happen in bubbles, which is essentially a 5-wave structure to complete a bubble, many times being approximately a 4.236 extension of the prior range. But what we're going to focus on for this minute is that the double tap, bull flag, breakout, violent backtest, V-bottom. I'll take all this stuff off from what we were just talking about, but to focus here on what happened with the Dow Jones Industrial Average is we spend about a decade in here, the lost decade, followed by building the double tap, bull flag here right on top of the previous range. Next, breakout, short squeeze, violent backtest, V-bottom. It's classic. They are actually quite common to happen. Bitcoin actually had one of these before we went on for the final leg of the bubble back in 2017, in which on top of the previous all-time high, double tap with the bull flag, breakout, short squeeze, violent backtest, V-bottom. Then we go on for the end of the bubble. We're going to come back to talk about this one shortly and how essentially if this thing is going to print a bigger bubble in the United States stock market, that we have to be kind of right there. And I'll come back to that shortly. Looking back to things like the anatomy of the pop of the Ethereum bubble back in 2017 and 2018 with our double tap here in the Dow, our double tap here with Ethereum, your violent backtest, then your roar on and excitement, and then your roar on and excitement. This is laser eyes, diamond hands, Elon Musk, big bubbles and ARK, all the goodies. Have the appearances of once you got about right there, then nearly like all phases of this have now been completed. We even pull back in here below this previous high that happens prior to the violent backtest. We pull back down in here, lower than prior high from the violent backtest. All things happening in here. And then instead of stopping at retracement levels in here, it actually continues to go on and goes and sets a new high. It's like, okay, well, there you go. That's got to be wrong, right? The bubble is going higher. Now, why is there the problem with that? And why is there still the concern in not being like, oh, dude, everything is great. This thing is definitely going for this because we got that there with the Dow and we didn't stall out. Well, the problem has been that the Russell still has. The Russell still has been stalled out in there and hasn't gotten out of it. We know that the Russell still has not gotten out of those retracement levels and still just sits in there, just as we sat here within the retracement levels. And this has been the measure of expansion and breadth opening up in markets. And while we have the Dow and we have the S&P and the NASDAQ all up there, it's really been run by a handful of stocks, and it's not an actual expansion happening in the market. Every time we've seen these moves happen in here, where all-time highs get cracked in the Dow Jones, like in 2013, 2016, and here in 2020, they are all expansionary periods where the breadth opens up in the whole market and all stocks run. It's never been break into new high, and it just be a couple of stocks that are doing it, right? every single time those breaks have come, it has taken the rest of the market with it as well. And this is the first time it's not, and that it's still just doing this whole thing. And so that's been the big reservation on being like, no, the bubble's still going to keep on going. Yeah, the Dow's higher, it should have stopped here, right? The problem is it's just a couple of stocks that are doing it. And so there just hasn't been this expansion that has always taken place. And that's why we haven't seen expansion in crypto. We haven't seen expansion in Bitcoin. Everybody hooting and hollering about Solana and Ethereum, but all they did was get back to retracement levels. No expansion took place. And it's why we haven't seen expansions happen in retirement funds, which happens with every breakout of the Dow, S&P, Russell, NASDAQ. These retirement funds all go through these breakouts at the same time. And for the first time, they're just not, right? They look just like the Russell because this hasn't been an actual expansion in the market occurring. Otherwise, you should be having these retirement funds sitting higher than their November of 2021 prices. Instead, they're still down, but typically they're going to go into breakout at the exact same time everything else goes into breakout as well. And this time they're not. So it's not just a Russell issue or a Russell 2000 issue. It's a whole market-wide issue happening in here where this expansion thing has to turn on, and it hasn't. And so this thing still has a grip and a hold here where this thing did the violent back test with the V bottom as we see over here and over here, then pulls back down below the high as we did over here as well. And we sit currently still in these retracements, right? It's like just still sitting right in here, right? It won't get out. And that in the anatomy of this bubble structure, this thing is still just in that retracement. But with the Dow Jones, we're not. And regardless of the Dow Jones Industrial Average meeting the same height as the Roaring 20s that led to the Great Depression, it has gone higher. So the question becomes, with the 4.236 extension not mattering, with the height of the Roaring 20s and Great Depression bubble not mattering, and if crypto wants to keep going and this has to break out and take the Russell with it, what anatomy could we look at to say it would be like an echo bubble, or it would be so outrageous that the bubble that gets printed will unquestionably leave disastrous consequences for the next 30 years. And that is where we come back to talk about Bitcoin and what we talked about earlier with its double tap here, violent backtest, V bottom, and then just kept marching, and that we'd have to essentially be somewhere like right here. That what this ended up doing is it ends up getting to just above a 4.236 extension and then goes for massive bubble, right? This is Bitcoin's big surge that takes it from like $10,000 to $20,000 back in 2017. And what we'd have to assume here in the bubble that we've seen so far in the Dow Jones is that all of this is what 2022 was. And this is what we have been working on here in 2024. And that we really have an echo bubble being printed over here for the Dow Jones Industrial Average. And that if you're wanting expansion and you're wanting to see things get roaring, that this is the likely outcome that would need to end up happening. That all your double tap, bull flag, breakout backtest V bottom takes place over here, which is over here, all the way up to the 4.236, and then a big full-fledged echo bubble afterwards. And that everything we saw happening in here is what is happening right in here to send this off to an echo bubble. That essentially has to be the bet for that to end up occurring. And that the Russell 2000 does follow along with it on that journey, which of course means it's going to require this time to be different. A common theme we keep hearing, right? It's going to require the stock market to go into expansion during a cutting cycle, whereas in the last three of them, over the last 25 years, have led to recessions instead of expansions. So to witness that and to see that happen would be very different from what we have seen over the course of the last 25 years. And so betting that an echo bubble is going to be printed does also require the bet that this time will be different and that the rate cuts will not lead or be forecasting a recession on the horizon. Because one thing that is not different is what we talked about earlier in this video, which is gold. And gold is acting just like it always does, in a pause and heading into a cutting cycle, that it rips and roars and does just fine into cuts. So as we are here and as we are going to cross through this moment together next week of the beginning of rate cuts, we know the history of what happens when we head into cutting cycles over the course of the last 25 years. But we also know this Dow Jones has exceeded that 4.236 extension. It has exceeded the size of the Roaring 20s bubble. And for some reason, it still hasn't stopped just yet. I'm hopefully optimistic, but not blind to these things that we talk about in here. And that this market reacted like this to get out just as it did back then. But will this time be different? We are all going to find out. And for all of our sake, I hope it is. Unfortunately for our children, it may not be as pretty of a story. But next week, it all begins. And we'll see how the market reacts to it. So tune in next week, where I'm certain it will be very busy, very volatile, and very wild as we finally hit the moment where the Fed is going to start the cutting cycle. The question is, how big is it? We have drama. We have the unknown, 25 or 50 basis points. The market cannot decide. So tune in next week as we also live stream the Fed meeting. But all right. That's going to be it for this one, guys. I wanted to kind of give you a little bit of a view of what bubble structures can look like. The fact that we have gotten above that 4.236 extension and the anatomy of what it looks like and the anatomy of past bubbles. Wanted to kind of give you a peek into that to see what those can look like. We know what we're heading into. We know how the last 3 cutting cycles have done, but there's certainly interesting behavior on the charts, and we'll tune into it every day to see how this thing unfolds. Otherwise, that's going to be it for this one. Have an absolutely fantastic weekend. You can check out the newsletter over here on Substack at blockchainbacker.substack.com. It's almost the middle of the month, so another one will be published there on Sunday. I do audio record all of these. This most recent one has a 29-minute audio recording to go with it. You can, of course, check out bcbacker.com with over 40 videos and 11 hours of content teaching you how to set up your own charts and your own indicators within TradingView and CoinTrader Pro. Otherwise, have a wonderful weekend. I hope you're getting nice weather and the fall is starting to kick in. Till the next one, I'll see you guys on Monday. That's it. Thank you so much for watching. If you could, please like this video and give it a thumbs up. If you're new to the channel, please subscribe and hit the notification bell so you can be notified of when I create new content and when I go live. As always, this is not investment advice and I am not a financial advisor. But if you ever need a pick-me-up or a little bit of reassurance, just remember that the blockchain backers got your back. Have a good one.